Start recording. Alright, can you guys see my screen? Alright, cool, perfect. I just wanted to go through this Euro GBP setup. I sent this markup in the Discord chat. Let me just who is it? Someone mute your mic. Obviously we saw this starting to downtrend, and we didn't really break any significant structure to the upside, as you can see. So it didn't really give us any reason to long. Yeah, we did have a burst of momentum here, but we didn't exactly break this high here. And right after that, we just fell again. So probably mitigate out of an SC within this candle. I just kind of wanted to break up this this um this setup for you guys, just so you can see how I found this setup. So I was on whatever time frame, and obviously we saw this come down, right? We broke this level here, which was somewhat a uh major intraday structure, but we just write BOS. Oh, I hate when that happens. BOS. Um, and off the bat, what you saw here was inefficient price action. Now you're not just gonna fib the whole inefficiency, because this is too much of a big gap to give an accurate reading of like where you kind of see. This is a 40 pip range. Like you don't know where you kind of want to look for your or place your POI. So what you do, you go down the time frames. Now, if you look here, we had a POI, we had an inefficiency within here, right? But this would give us a completely different reading, because here our 50% is now up here. So I wouldn't really do that per se. So go down a lower time frame and see if we can find something that fits within this little region here. Okay, now we have this inefficient candle here, but the issue is that if you look at the bottom of this candle here, there's no wick, so you can't draw the inefficiency from the. Oh, let me mute my phone. You can't draw the inefficiency from the body. You need to draw it from. Let me close Discord as well. You can't draw the inefficiency from the body. It needs to be from a wick. So what we do? Oh, that's annoying. Let's go down one more time frame. Now we have a wick here, but we don't have a wick here. One more. Let's go to the 4 minute. What do we see? Again, now we've got a wick here, but no wick here. 3 minute. Now we just have no wick on either side. 2 minute. Alright, this is getting slightly annoying. Okay. Let me actually just replay this so I can stop scrolling back. Let's place this here. Alright, cool. 2 minute, again, we had a wick here, but no wick here. 1 minute, finally. So this is where our 10-minute inefficiency is. And now we have a nice 1 minute inefficiency here. Right? But what we can do is we can draw our POI box to be from the 1 minute fill all the way down to the 50% tap on the 10 minute. So now what this gives us here is a nice little 6 pip POI. You see how we went from 40 pips to 6 pips. Now we have sort of a more accurate, more precise POI region where we kind of want price to come back into. Now further confluence, you want to see if this falls into premium market. Yes, it does. Let me just see for the sake of argument if this is. See, is your perfect retail 618 tap. That's how they work. So this falls nicely in premium market. So that's another confluence. So what actually ended up happening here is we traded back up. Let me just go back to the 5 minute, speed this up a bit. Traded back up, tapped that POI, and rejected off it. Now you don't want to take the trade just off the POI. If this region here didn't give you a opportunity to enter, that's fine, because price in the future will give you somewhat an opportunity to enter. You don't have to get in where the POI is. The POI and the rejection of it just confirms your bias essentially. And also what we had here is we purged a high literally by like not even, what is that, by 0.2, 0.3 pips. This is also confluence. If we purge liquidity before dropping, that shows no upside corporation. So we know that we're most likely going to continue direction to the downside. So let me just get out of replay now to continue with the chart up. So what we had now was let me just actually replay back here. All right. 23.4. Okay. Now what we had here was this was the Asian session. We started consolidating, and what we had here was the Asian high and the Asian low here. Yeah. So usually between in the Asian session we just consolidate, no real movement. So what you'd kind of expect is a BOS of this level when price comes down, just so like, you know, break up structure of market to confirm our downside bias. Now what we had within this region here, right, this is where we start to follow the narrative. So if we go to the 4 minute, I'm not going to spend time going through all the different time frames. Look what we had here. Let me just move this back here. So we had a bullish candle followed by a nice reaction. I'd prefer this candle here to be less indecisive, but the only reason why I'd kind of give it a pass in this one scenario is because that the 50% of this SC also lined up beautifully with this inefficient price action here. Literally both of them lined up on the same level, maybe 0.1 pip difference. So now what we have is our entry level here. So let's say you do take the trade off of this level, you could set your stop loss just above this candle here, 3 pips, or if you want to be a bit more conservative, 4.5 pips just above the highs. Just zoom out. Oh, all right. So what this is here is our SC on the 4 minute and an inefficiency. Oh, and the inefficiency. Come on the 4 minute, 50%. Yeah. What we have here, downside target, external range liquidity. So realistically, what you kind of want to look for is what I've showed you guys about the 8 a.m. morning move, the false move, sorry, where we purge liquidity, right? or we hit our POI just to reverse against that false initial move, yeah? So let's say we, and should we do this here, what we're gonna do is take out the Asian high. Why does that do that? We're gonna take out the Asian high and then hopefully return down and take out the Asian low. So buyers and sellers within the Asian consolidation will be taken out unless obviously their stop loss is like insanely high somewhere above here. So what this would give us is a sharp entry right here. Now, it's good enough knowing what price level your entry's at, but also using time with price will kind of give you that extra confidence you need. So what you kind of want to look for is this minor break of structure when we mitigate the inefficiency and the SC as a confirmation. So what we had was, this was what, 8 a.m. and this here was 7:52. All right, watch this. 8 a.m. bang on the dot. We literally came up 8:04, 8 a.m. bang. We tapped the entry, right? So let's say you took the trade here. Okay, let me just set our stop loss to 45, and obviously the take profit was down here. So this would have given you 13%. It would have been your external range liquidity, 13%. And literally what we saw, precise entry and bang. This whole trade happened within an hour and a half. So you could have spent the whole week in the market, and then in an hour and a half you would have made that one trade of the week you're looking for, and then you would have been done. Obviously you had your BOS here. Perfect BOS here. That's the kind of BOS you're looking for. Look at that, literally shredded right through that, took out the Asian low like we wanted to, and hit our take profit. Now from here, it's completely up to what you want to do. If you're more of a, if you kind of want to trade like me, you just want to take your slice of the cake and leave, you should be more than happy taking 13% and exiting the trade. Now keep in mind, and I keep saying this, for normal retail traders to make 13%, right? They need their take profit to be what? That's not even 13 yet. 11. This is the kind of trade they need to take to get what you make, right? 13 there. So you caught 60 pips and made 13%, right? Normal retail traders use a third. You can go on any retail strategy course where you short trend lines and you sell off fib levels. They all say 30 pip stop, right? So for you to make 13% back, you need to catch a 400 pip move. Now, the market barely even moves that amount per week. So you're gonna make 13% probably across the month if you're lucky. That's not even accounting for losses. And if you're managing to make that in an hour and less than an hour and a half, then there's no reason why you shouldn't be happy taking your profits here and exiting. Now keep in mind, obviously when you do this, you've made 13.4%, let's just say 13. If you're risking 1%, you need to mess up the next 13 trades consecutively, one after the other, in order to break even. Also, something I didn't mention, you also want to do your 10 pip uh 10 pip rule, where you enter with two positions and 10 pips in, you're gonna close one of the trades. So let's go to 10 pips. Bang. So you would have bagged a nice 2.2%, not even accounting for this trade. So let's say you close this at obviously this level here when prices dropped. You would have made your nice 2% there, little tip, and then on top of your 13, you would have bagged a nice 15% trade. And this was at the end of the week. This was on the Friday too. That would have been a nice trade. So yeah, it's pretty much how to it's kind of how to find your setups. Really, it should flow like this. It should make sense. Like obviously we had inefficiencies up here and everything, but you don't exactly also you don't wanna line up every POI and see like where. I mean, you could line up every POI and see what happens, but you see how we just let the market do what it needed to do. There's no need chasing it, like being like, oh, it's going up here, this, that, and the other. Let the market show you what it's trying to do. Obviously, towards the end of the New York session, we kind of slow down in terms of volume in the market, and across the Asian, you kind of get a consolidation, and then as soon as the market opens, bang, false move, and then return to the downside. You could catch these moves pretty much every 8 a.m. Go to Euro GBP, GU, what else? I think GBP NZD, US 30. US 30 does this nicely. This 8 a.m. warning move. If anyone trades US 30, take a look at it. Just look what happens at 8 a.m. every day. Yeah. Now, in terms of what I'm looking for next week, let's just delete this. Obviously, if anyone got any questions, just throw it in the chat. No, I'll respond. Delete this, delete this, delete this, be gone, delete that, delete this. All right. So we obviously, if we're following the same rules and structures we followed here, there hopefully should be something within here that we'd like to see price come back and mitigate. So obviously, not going to waste your time going through all the time frames, but that's what you should be doing. On the 6 minute, we have a wonderful SC printed here, followed by a beautiful reaction to the downside. Now again, this indecision candle isn't exactly favorable, but after that we literally had a massive melt off, which gives me some indication that some bigger players, maybe institutions, have interest in this region here, which is why I'd kind of choose it over this inefficiency here. Now that's not to say that this won't work, because I'm not right. We could actually come up into this unfilled area of the inefficiency, because obviously we came up. This is the whole inefficiency, right? From this wick to this wick. But we also have this level here, which is still inefficient price. Yeah. So we could actually come back within this general region here. We could come back and fill and then drop. But I'm going to stick to my rules and what I know. And to me, this SC also lines up perfectly with this inefficiency right here. If you see that, bang. So what that gives us is this general region between the 50% of the SC and the inefficiency fill, where I'd like price to come back into, mitigate, and hopefully drop. In general, if we pair this up with time, where's our uh, okay, wait, what is this? 10 a.m. Wait, here we go. I was wondering, I was like, wait, hold on. Why did the market stop at 10 a.m. Right, so obviously this is when the market's gonna open tonight. And then where's our 8 a.m. 7, 9, da, 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 da. There we go. 8. Boom. Here we go. So this is hopefully when I'd want to look for price to move into this region, tap it and run. So this is obviously going to be our London Open. Why does it do that? London Open here. So we know we want price to come tap this price level, and we know that we want it to do it at 8 a.m. So when I'd like this to happen is here. So obviously I like for price to come up, take out this high and this high and all these highs. I like to see this trade up, oh, come up, tap this level, have a nice break of structure to the downside, return back up into somewhat premium market, and continue this downside direction. Now, you could say, you could take this in one or two ways. You could wait for price to come back up into premium, and that's when you get your confirmation. Obviously, you might have your inefficiency or whatever within here. You can take the trade off it, but realistically, this here is going to be, if we put a stop loss above the inefficient price, we'll have a nice 3 pip. Again, if you want to be conservative, throw it above the high, nice 5 pip stop loss. And if we ride this down to external range liquidity, which we have resting below this consolidation, then again another 13% trade there. So you could literally, Monday morning, you could literally wake up at 8 a.m., hopefully maybe take this trade and it'll work out, and then you could be done for the week. You don't even have to trade Monday to Friday. You could literally take this trade at the beginning of the week and be done for the whole week. Just be good. 13%. Like I showed you before. How hard is it for retail traders to make this sort of percentage return? Besides that, I don't really have anything else to show you. I think there was something on GJ actually, so let me see if that's still marked out. Oh yes, I think I showed this to Rahul maybe. Essentially what we had was price. Obviously, I'm not gonna delete this and try it up again because that's just super long. But we had equal highs here, and we had a inefficiency on the 2 hour. The 50% was tapped right here. So when we came up, not only did we tap the inefficiency, but we also took out the highs. And look at this reaction. Okay, I haven't made a video on SCs yet. I should, and I will, but I haven't yet. Tuition coming tonight, for those wondering, before anyone else. But look at this massive upside candle, purging the liquidity, mitigate, and then run to the downside. That's the kind of reaction you're looking for. Because remember, if they're gonna buy to sell, they're selling with millions of lots. So when they sell with millions of lots, that's not going to be shown through price like this. Yeah, it's not going to be shown through price by like sloppy price action. If someone's going to enter the market with millions of lots, you best believe you're seeing this kind of reaction to the downside. It's going to melt off. So realistically, I kind of like this 15%, 15-minute inefficiency here. And that also lines up with 4 minute, no wait, let's say 15% inefficiency, 15-minute sponsored candle. And that also literally perfectly lines up with our 4-minute inefficiency. So then we have this general POI region of 3-4 pips. So realistically, Also with the Euro GBP pair, I forgot to show you momentum, but momentum was to the downside. I'm not gonna go back and show you. Just drag this. I really need to upgrade my Mac. This is abysmal. Delete this. Right. So momentum analysis. Bang from our. Let's just even do it from our SC to here. If you guys can hear my brother screaming, I'm sorry. That's 104 bars, and so far the retracement's taken 90 bars. Now the thing is, this isn't our complete retracement yet, and something that I've realized across the market, and this is something that's hard to like have like data to back it, but essentially what the market does sometimes is it kind of does this. It has like an arc to the upside, right? And throughout this entire arc, buyers are like enticed. And then what happens at the very end of the arc is you have a massive spike up, and then all these buyers are all super happy because they're in crazy profit right now. Like this just rocketed. This is the kind of thing they live for. But then what you notice is right after the spike, we mitigate something, and this just drops. And then these buyers here are either in denial because obviously this move here felt so good that they don't want to believe that now they're going to lose all their profits. So they're either going to hold, and most of them are going to lose their money, or those of them who have identified, I'm probably going to get taken out if I don't exit soon, they're all exiting their buy positions. Now, exiting buy positions, let me just write this down. Exiting trades, we've got 10 minutes left. Exiting trades relieves pressure from the market. And what I mean by that is, if we have a bunch of sells, up here, and when we came back into that region, all the sell orders closed, all of a sudden, it's like a simple supply and demand, all of a sudden, all the sell orders are gone. So there's no selling pressure anymore. So what's going to happen is price is going to drop, right? And the same way here, when this is dropping, give me a second, let me get my paintbrush out. When this is dropping, when everyone's exiting the market, there's no buying pressure stopping price from falling even more. So what's going to happen is this is going to carry on dropping. So we have two sides of the coin here. We have one side where people are exiting, and we have another side where liquidity is being purged and all the buyers are getting taken out. So that's kind of what we're seeing here. Let me just delete all of this. It's kind of what we're seeing here, hopefully. We kind of have like a nice arc to the upside. Oh, paintbrush out again. Kind of have a nice arc to the upside. Hopefully this continues momentum a bit more, and then we're gonna have a spike to mitigate, bang, break of structure, hopefully return to somewhat premium price and then melt off. And then obviously what you want to do, set your take profit here. By the way, just to note, at external range liquidity, I usually take 75% of the trade off and let the rest run, simply because like 75 is a good number for me. Just how I do it. If you want to take the trade off of this here, obviously you will be guessing the top, but since the analysis lines up and it follows price's narrative, what you kind of want to see is I have like a nice stop loss above the above the inefficient price action, maybe 5-6 pips. And if you don't want to take it like that, you can always wait. You can just wait for the break of structure and return to premium before taking it. This would be a nice 30% trade if we come and take this low, which I believe we will, simply because of price downtrending for the last God knows how long. we've been downtrending for a while. Obviously, we have some form of upside structure here, but this mitigation and this nice rejection level of it and this BOS here gives me reason to believe that we might be looking to short this. Also, momentum's on our side. Everything kind of lines up. And at the end of the day, if you're wrong, you're only losing 1% of your account. So it's all up to you to assess whether the risk of the trade is worth it or not. Obviously, let me just stop recording now.